Welcome to Medicare Lagniappe, where we cut the confusion on all your Medicare-related questions and cover topics plus real-life scenarios to empower you for a better understanding of your Medicare options today.
Welcome to the Lagniappe, Fossil Group's premier site of learning everything about health insurance. My name is Caroline Badon, and today I am here with Rick Canamar. Rick, I'm so excited to have you.
I'm excited to be here.
We're going to be discussing some life insurance stuff today, financial protection, some things we haven't really touched on yet, so I'm excited.
That's right.
All right, so I have a whole list of things for us to go through today. This is not my specialty, so I'm going to go off of my list, and you tell us what we need to hear.
You know, I heard a statement recently that said that the people that passed away yesterday had plans today. And the people that had plans tomorrow passed away today. And so many times that we don't realize the importance of life insurance. You know, when you think about who needs life insurance, well, everyone needs life insurance, you know, for those factors, right? The security, the responsibility. You know, I share with fathers all the time, just because you're not here any longer doesn't mean your responsibilities are no longer present, if that makes sense.
That's a good point.
Right? So it's all about just, you know, planning ahead and making sure that you have that, you know, all your plans in a row where you're leaving your family security, not a struggle.
Right. Right. So there are so many different types of life insurance, term, whole, universal. Can you break down the differences for us?
Sure, absolutely. You know, so, you know, I want to keep things simple, right? You know, to really digest easily. So term is temporary coverage. It's the easiest way to understand, right? You have temporary for 10 years, 20 years, 30 years. The easiest way to understand it is compared to your car insurance, your homeowners, your health. You know, you get the most affordable kind of insurance for the highest coverage.
Right.
That's term insurance. Then you're going to have your whole life products. And it's exactly what it says. It's covered your entire life. Typically with whole life, the product instrument is created where you overpay in the beginning, so that way you underpay long term because you get older.
Understood.
You see? And then of course, whole life, not to get technical, but they got two cons. You have participating whole life and you're non-participating. Your non-participating is your typical whole life you see out there that guarantees the premiums, it guarantees the death benefit, and it guarantees your cash value.
Okay.
So anytime an agent can always pull out a proposal and give that to you. Everything is guaranteed. Participating whole life means you participate in the profits of the company. So not only do you have all those guarantees, but you also get a bonus or dividend depending on what state you live in, what they call it.
Interesting. And universal.
Universal, yeah, very, very important. That's really the niche product that we use for retirement, college funding. I know we're going to tap into that. But there's four kind of universal lives. You have your guaranteed universal life that gives you guaranteed cash value, similar like whole life, right? Same chassis, right? The financial instrument is the chassis of a permanent product.
Right.
And then you have your universal products, right? Your generalized universal products that give you a consistent rate of return. Your index universal life. Now you're talking about something that you can leverage and you can scale, right, for your advantages for retirement, college funding, and we'll touch on that. And then of course, your variable universal life. Those really are credit strategies that are dealing with mutual funds. Really the product that we really use to leverage and scale is the IUL, the index UL.
So all of that is so confusing. I mean, and I'm in the industry and it's confusing. So I know to our viewers it is as well. I guess let's try to break it down, kind of dumb it down a little bit, I guess, to make it more understanding for them.
Sure.
What's the best way? So if you were sitting with me, I'm 26, I'm married, I have a child. What would your recommendation be to me when it comes to life insurance?
So, you know, and there's no one size fits all. I want to say up front, right? So a proper agent would do something called the fact finding. And we're going to assess your assets and liabilities. That's what it's all about. You know, what are your responsibilities currently? And what are those products that we need to use to cover those responsibilities? Right? The theory of decreasing responsibility does come into play. And the whole concept is that your responsibility is high when you're young. Kids are young.
Right.
You're still taking care of them. See,
Mhm.
I'm in the fourth quarter. They're already off the payroll, almost. You're still in the preseason, right?
Right.
So, you have high responsibilities, so you have to use those type of products. And at that age, term products are really the best product to leverage. It's the most affordable kind.
Mhm.
You can get a 20, 30-year term for pennies on the dollar
Right.
for $2, $3, $4, $500,000 of insurance. What I look at also is not just that what they're responsible for, but their income.
Right.
Life insurance is supposed to replace something, right?
Mhm.
Insurance is a replacement of
Right.
something that lost. And so you lose someone's income. So when you're sitting with someone, I'm going to ask them, what is your yearly income? And would you like that income to be coming into your family, regardless if you're here or not?
Right.
That way, that lifestyle continues.
Right.
Does that make
So the
sense?
spouse and the child are not left scrambling.
Absolutely, absolutely. So term is the way to go. There's nothing wrong with term as long as you understand you're not going to get anything back.
Right.
Term has sometimes a bad rep, but that's because the perspective is wrong. The
Mhm.
perspective should be just like any other insurance. You don't get any money back on your car
Right.
or your home, so you
Right.
shouldn't expect anything back on your term. But at that age, though, I'm still going to talk to them about permanent products because right now I just gave Jordan his IUL that I bought for him years ago.
Mhm.
And I told him, don't ever drop this because you're going to be paying a 9-year-old rate when I got the policy when you're 70.
Ah.
Everybody wishes they would have had the foresight
Right.
to plan ahead. And then, of course, I got one of my clients right now, we're leveraging for college funding, and we'll touch on that, where he'll have over 6 figures in his account at age 18 years old to utilize for college. So it depends if they have children, not have children, do they have a home, do they have numerous debts, but term is a way to go with some type of permanent chassis product also attached to it. I like to do a combo.
Understood. All right. So a lot of people don't think about life insurance as an estate planning tool.
Yeah.
Let's talk about that. How can it help with wealth transfers?
Yes, yes. So, the great thing, thank goodness Louisiana is one of the 38 states that we don't have a state inheritance tax, a
Mhm.
state tax. But of course, if you live in Washington, the state tax over there is 2.1 million.
Oh,
Now,
wow.
to have a problem with inheritance tax, right, for your state, the I think it just raised to 13.9 million, your
Mhm.
state individually, 27 million for a joint. So that's a good problem to have, right?
Right.
Right. But typically, people use life insurance also as a ways to pay off any remaining debts. You have your predators, you have your creditors, I call
Mhm.
it, right? You have
Right.
probate, you have all these different, obstacles that your living heirs are going to be faced with.
Right.
And so by having some type of life insurance program set in place, you can really just make your family just have a peace of mind that they don't have to worry about those things.
Right.
Using the funds from life insurance, because all life insurance are tax-free. So that
That's good to know as well.
absolutely, that death benefit can be leveraged obviously for those type of debts.
And that was going to be my next question is tax.
Yes.
What should people be aware of?
So when it comes to, obviously using life insurance, that is not going to be taxed, right?
Mhm.
But people use different things to prepare themselves for that state. You don't want to be where you were like Prince, where Prince had nothing. He had no will, no trust or living trust. He just had
Wow.
left it to the state. They're still battling about a year ago in the state of Minnesota, obviously his belongings. So by not having anything, you're basically just leaving it
And
to the
how long
state.
has he been gone?
It's been gone
A
for
long
quite a while,
time.
right? Right.
Wow.
Yes. So a will would be next in line, and then of course a trust would be next in line. Those 3 chassis, the only one that avoids probate is a trust. So that's something that you can consider. Talk to a real estate, a tax consultant that really can, guide you in that direction.
And explain to our viewers probate, just in case they don't know, so they can still kind of follow along with what you're saying.
Yes, yes. Yeah, so probate's so important to understand because you want to avoid probate. I call it where you're really sending your family to the worst place of your worst day you're feeling bad in a situation inside a court. Because typically probate takes anywhere between 3 months to 18 months to deal with.
Yeah.
So your heirs have to deal with all that. And when they go to court, they're really flustered.
Mhm.
They're overwhelmed. They maybe feel
Overwhelmed.
like they're being taken advantage of.
Emotional.
Sometimes they may have to advocate for
Mhm.
themselves. So the last thing you want to do is put them in that position. And the only way to avoid probate is by having a trust. A will is not going to avoid probate. A will is just going to designate where your assets go.
Understood.
hmm
Let's talk long-term care
Oh,
insurance.
yes.
Is it worth it?
It is. It is. It's worth it when you get it at the right age, right?
hmm
So, when you're getting it at ages 40 and 50, it's affordable. You
Right.
know, Um, the thing about long-term care, 70% of people, if they hit 65 years old, will need someone to take care of them. That's 7 out of 10. And so the question I always ask my clients is, you have three choices. Either you're going to have to spend all your assets,
hmm
you're going to rely on a family member,
hmm
or once you spend all your assets, you're going to rely, hopefully, the government takes care of you.
Yeah.
And which choice would you like to have?
Yeah, you don't want to be in that position.
And any of those positions, right?
Mm-mm.
So long-term care, to simplify long-term care, what you're doing is you're buying a product that has a chassis similar to like life insurance. You're buying a bucket of benefits,
Right.
okay? To break it down very simple, you have 2 to 3 or 4 years worth of protection benefits. And then you have a monthly distribution you could choose from. $1,500 to $15,000 a month. So to keep it simple, let's say you choose $5,000 a month
hmm
and you choose a 3-year chassis where you want it to pay out for 3 years.
hmm
The average stay in nursing home is 2.5 years
Right.
of assisted living. So if you think about that, it's $180,000,
hmm
$5,000 distribution. And then you could choose your elimination period. Your elimination period is typically like your deductible, right?
Okay.
0 days, 30 days, 60
hmm
days. They have them all the way up to a year. Some people want to obviously use some of their assets. Obviously, choosing a higher elimination period lowers your premium,
Understood.
okay?
Okay.
So it's all about, of course, designing that long-term care correctly. Some of our top carriers design it where if you have a joint long-term care, husband and wife, they have something called shared benefits, where let's say the wife ends up using long-term care for
hmm
home health care reasons. Home health care, I think, is $65,000 a year. Nursing home, assisted living, private room is $111,000 a year.
You're the statistic king.
Well, I just try to know my homework, right?
Yeah.
Because people are going to want to know, right?
Yeah, it's
And
great.
yeah, and the thing is that you got to be faced with reality, right?
Right.
Because, reality is what disturbs people to move. We
Right.
don't move unless we're disturbed,
Exactly.
right? And so with that being said, it's about designing it properly, making it affordable, and then of course, that way there's peace of mind for those clients. One thing about the shared benefit, let's say the wife taps into that bucket of benefits.
hmm
If they let's say they draw and deplete that $5,000 a month for $180,000, which is a 3-year period, well then they could tap into their husbands if the husband
Okay.
is not using that. So there is benefits for having a joint,
Right.
of course, two people getting together for that particular product.
Okay. That's good to know.
Mhm.
So is it, I mean, we said it's worth it.
It is worth it.
Is it too, some say it's too expensive,
Yes.
rarely pays out, things
Yes.
like that. How would you combat those comments?
Yes, I would combat it with that. Well, you know what? You could choose the return of premium rider that one of our carriers offers. So you have to look at it almost like you put away your money and then of course you're getting all your premiums back. Now obviously
Right.
that increases the premium, but once again, you allocate your, obviously in terms of deductibles for your days, right?
hmm
Your elimination period, right? That way you make it affordable. I saw recently a 55-year-old male, if he's in good health, he can get a very decent long-term care for about $1,700 a year. It's not
Okay.
that it's too cheap, but it's not too expensive.
Right.
But the key thing is planning, understanding those statistics, and just
Adding it into your budget
adding into your budget and thinking long
as a
term.
necessity. Yeah.
Absolutely, absolutely.
All right, so let's talk about, this is our last segment here, using life insurance for retirement income. I've heard that permanent life insurance can be used for retirement income. How does that work?
So the thing about using the IUL,
hmm
right? That is the key financial instrument that we use to leverage and scale for higher yield inside the product,
Okay.
right? The agent can design it where you could choose a minimum death benefit. Okay, so follow me, minimum death benefit,
hmm
maximum funding,
Okay.
to where it doesn't go into a MEC. A MEC is a modified endowed contract, which means that that's the time when the government doesn't allow you to put those kind of funds to maximize what we're trying to do with the product, which is tax-free growth
hmm
and tax-free distribution. You can actually set it up where at age 65, if you're pouring in funds, you can start drawing out tax-free loans.
Okay.
Very powerful feature. Minimum death benefit means that we're trying to pay as little as possible for insurance costs and maximize funding for college funding,
Yes.
and of course for retirement,
Mhm.
right? Those are the two strategies. And let me touch on this when it comes to college funding. A lot of parents use the 529 scholarship.
Mhm.
I somewhat advise not to compare, because with a 529, you have to understand that goes on your FAFSA. So for any needs or merit base when it comes to scholarships,
Mhm.
they're going to look at all that on your FAFSA. The
Okay.
529 must be disclosed. Where when you use a chassis of an IUL for college funding, all that cash value that grows is invisible on the FAFSA.
That is important.
Extremely important, because your child may not go to college, or may
Right.
they go for 2 years, or maybe you need funds for other reasons.
Right.
The only way you could use your funds for that 529 is for schooling, where obviously with that IUL, you're using it for any means. So the way to do it is just structuring it properly, where you're getting it at a good age, right?
Right.
Of course, you have to qualify with all life insurance. You have to be healthy, right?
Mhm.
But the great thing, there have been more liberal when it comes to underwriting. I've insured a lot of diabetics. People have had previous health conditions. So the key thing is, hey, you got to give it a shot and of course apply, right?
Right.
But that's how we use it. We use the financial instrument of the IUL. Inside the IUL, also, you can choose credit strategies, not to get confusing, but it's almost like the allocation of your 401k.
Mhm.
When you choose your 401k, you could choose small cap, mid-range, even bonds. What you're choosing to obviously grow the nest egg you're trying to provide. Inside the IUL, there's certain S&Ps, there's certain funds that you can participate to, that they will contribute to. So for example, there's also a floor. So IULs have caps and floors.
Mhm.
So let's say in one of the credit strategies, they let you participate, which one of our carriers just increased to 12.75. It's pretty good.
Okay.
So that year, if it yielded 14%, you're going to get that 12.75.
Nice.
Obviously, the remaining going to the company because they got to make money.
Right.
But let's say the market takes a dip and it goes down 20%. We've seen that.
Right.
Well, zero is your hero. The funds that are inside stay there, and you actually get a 0.75 interest. So your nest egg never decreases inside of IUL.
Ah, that's important.
Very important
Yeah.
for college funding or retirement.
Yeah, I like that.
Mhm.
So I know I said that was the last segment, but I do want to talk a little bit about the life insurance products for your babies. Like I said, I have a 10-month-old.
Yes.
He doesn't have anything at this time.
Don't worry, I'm coming over tomorrow. We'll write that.
Let's talk about it. I know Gerber has something,
Sure.
and there are some other options. Let's talk about
Mm.
young parents setting things up for their children like you did with Jordan.
Absolutely, absolutely. So, and those are great companies out there. Those are long-standing, Gerber and all those companies. But if I can name drop a couple of companies that we
Yeah.
leverage, Transamerica was the first company to create the IUL.
Okay.
And Universal Life has been around since the 80s. But in 1997, Transamerica created the IUL.
Okay.
So they're one of my lead carriers because of, once again, the yielding of the interest and the way they set things up. Mutual of Omaha, one of our other top carriers, very well known, another incredible IUL.
Okay.
So for parents, they want to use those type of companies. We use the IUL. Gerber's great company, but they don't sell IULs.
Okay.
They sell mostly whole life products, very inexpensive, which are great to have because if you want to have a $10,000 or $20,000 death benefit for your child, that's great, but that's not going to generate you money for college.
Got it.
The IUL is the financial instrument
Okay.
that has the chassis that will create the yield for the returns that you're looking
And
for.
break down IUL.
Index Universal Life.
Got it.
Index Universal Life.
Okay.
Mm-hmm.
So I know us insurance agents,
Yes,
we have all
throwing out jargon.
we have all these lingos and things, and I'm on the health insurance side.
Right.
Yeah, but IUL,
Yeah.
they don't know what that means.
Index
So that's great.
Universal Life.
Got it.
That's right.
Okay, so we've covered a lot today.
I think we have.
Some key takeaways: life insurance is essential.
Mm-hmm.
Term life is affordable.
Mm-hmm.
Life insurance plays a big role in estate planning, helping avoid financial burdens
Absolutely.
after one is gone. Long-term care insurance can protect assets, but isn't the only option. So there are hybrid policies.
Mm-hmm.
Permanent life insurance can be used as a financial tool. IULs are huge when it comes to children and setting up
Absolutely.
those money buckets,
That's
essentially,
right. That's right.
for the child in the future. Because, like you said, what's the other one called that you can only use for college?
The 529 scholarship.
Yes. So that kind of puts a limit on what you can use things for.
Absolutely.
So, and not everyone goes to college.
Absolutely.
So
That's
some
right.
very important things here. Let's dive in a little bit.
Okay.
Let's talk about like how your health
Oh, one of
applies.
my favorite topics.
Yes. How does health apply to life insurance? I know that there are some underwriting things and things like that. Why is it important to stay healthy? Drink your water, keep your protein up, move, all of those things. Give it to me. I know you want to.
You know, if I, like I shared earlier, my philosophy is faith, family, fitness, and finance, and how you feel is how you operate. When you feel good, your attitude is in check, right?
That is so true.
And so, especially in the world of dealing with clients, this is a how you feel about yourself business.
Mm-hmm.
When you feel good, you can really project that energy, right?
Right.
And so fitness has been so important in my life, just taking care. And I'm so grateful that my kids have taken on those habits, right? So they go to the gym with me, right? As far as underwriting is concerned, they're definitely going to look at that when it comes to health, right? So there's height and weight requirements and all those different things. And, they're going to assess your lifestyle, right? So if you want the best ratings, right? Lowest premium costs for cost per thousand for insurance, the key thing is staying healthy,
Right.
right? Utilizing, we got a lot of clients in our Medicare, and anytime I talk to one of our Medicare clients, I always influence taking advantage of that fitness program.
Fitness benefit,
Yeah,
yes.
my mom and I have been bringing my mother to Elmwood, and we're doing yoga together over there. And she's never done it before, and now she's all engaged, right?
Yeah, and moving better and
Moving
limber and
better.
feeling good, sleeping good.
Absolutely.
That's
Yeah.
another thing is your health really applies to your sleep.
Oh, absolutely.
I can tell a difference when I go to the gym, how much better I sleep versus the days that I'm just don't have the time for it and I
Yeah.
don't sleep as good.
No, that's right.
Water intake,
Water intake.
protein,
Yeah.
vitamins, all the things.
Yeah, and the thing is, I think that people overcomplicate it, because I do some online coaching and training, as I competed in bodybuilding. And people tend to overcomplicate health. It's really just coming to a place where it becomes your lifestyle. It's not going on a diet.
Exactly.
So when people tell me they want a diet, no, I say, no, we're going to change your lifestyle. And so when you embrace that, and in the beginning it's a little different, right? Because you're now maybe doing some meal plannings and choosing some items that you're not accustomed to, but you'd be surprised. I read a good book called Fat, Sugar, Salt, and it talked about how people are food addicts because they intentionally put things, and I know because when I eat one Oreo, I want to eat the whole bag.
Yeah.
Right? So we've all been there.
Well, sugar's instant serotonin
Absolutely.
boost.
That's serotonin. That's right. That's right. So I think it's just so vital that, we lead by example as parents, number one.
Agree.
And we create that environment of health and well-being. And I think it's a sign of self-respect. And then once again, you feel better about who you are. I learned this a long time ago, Caroline. If I feel good about the man in the mirror, I can make everybody around me feel good about who they are.
It's very true.
Right? So
It's true.
that's all about taking care of the
life
mind, body, soul.
life really, how you live your life really revolves around how you feel.
Absolutely.
And how you feel is how you make others feel. And I think that's what makes the world go round.
Absolutely.
Taking care of yourself is key.
Absolutely.
And I've learned that just from being a new mom and having all these things, taking care of my kid, being a wife and working and household chores, making time to go to the gym and making time to read my book and making time to take care of myself really it's better for me, but also better for my household,
Absolutely.
my job.
Absolutely.
Everything else is just
you can't give what you don't have, right?
Exactly. You can't pour from an empty cup.
No, you can't. And my philosophy is, I tell my kids all the time, two things. You're always making people feel something. Always remember that.
Yes.
And you can't. And my bucket better be full.
Right.
Because people around me are going to need that, right?
Right.
So we got to pour from the overflow, right?
Right.
Michelle and I do read our devotions almost daily, and it's amazing the connection that we stay, because I'm either getting closer to my wife or I'm slowly drifting apart, but there's no neutral, right?
Yeah.
So it's got to be intentional. So all these habits got to be intentional. And then, of course, it help you with pricing when it comes to life insurance, too.
Yes, yes. Well, Rick, I have really enjoyed this.
Thank you.
I'm
Thank
so
you.
glad that you're here.
I did, too.
You have been with the Fossil Group for how many years now?
Oh, it's going
10?
on. Yeah, no, actually,
more than that.
like 14, 15
14,
years. Yeah, when I
15.
first started, it's been amazing.
So we
It's amazing
started
what y'all
in
created.
2012, so this will be the 13th year?
Ah, there
No,
you go.
that's not right.
You started 2012, so 2025. So what are we
Yeah, this
talking?
will be the 13th year.
Okay.
So you've
Wow.
been here for 13 years.
Yeah.
And you've been in the financial industry to say for 30.
30 years, yeah.
So an expert to say the least.
Oh, well, thank you
And
so
I'm
much.
very, very happy to have had you here.
Absolutely.
All
And I
right.
look forward to the next one.
Yeah, we're going to have to do this again. So if anyone has any questions about life insurance, please feel free to give us a call. We can direct you towards Rick and let him help you out. If you want to explore your options, talk to us. Go on our website, look at our socials, give us a call, and you can meet with Rick, and he can sit down and really go over the options and what you need specialized to you. So that's it. That's all for today, Rick.
Thank you very much.
All right. Thank you for joining us on the Lagniappe. If you've enjoyed this video, like and subscribe and stay on the lookout for more. Follow us on Facebook, Instagram, and visit our website at fgiala.com.
Thanks for watching. This has been a Fussell Group Insurance Advisors educational production series. If you enjoyed this video, like and subscribe and stay on the lookout for more. Please follow us on Facebook, Instagram, and visit our website, fgiala.com.